Hi and welcome to Checkin.com second quarter report 2025. With us to present we have CEO Christian Karlsson and CFO Martin Boimel. With that, I give the word to you, Christian.
Thank you, and good morning, and welcome to today's webcast. My name is Christian Karlsson, and I'm the CEO of Checkin.com Group. And I have with me our CFO, Martin Boimel. We will walk you through our report for the second quarter of 2025. I hope you had a chance to review the report this morning before our webcast. The plan is that I will talk about the company's general development, followed by Martin, who will go through the numbers. And after a brief summary, we will open up for questions. We are starting to see that our cost focus reflected, starting to be on the EBITDA margin, while we continue to drive long-term growth. We ended the quarter with a revenue of 18.1 million Swedish kronor in quarter two. That represents a 4% decrease compared to the first quarter of the year. Year over year, we saw a decline of 11%. If we adjust for the previous revenues from the old customer called Ring Central, that was tying up the personal cost at a similar level, the growth was up 6% compared to last year. The cost-saving measures we initiated at the beginning of the year, we're now starting to see in the numbers, with an EBITDA margin of 17% in the quarter. With a continued focus on cost and further streamlining the organization going forward, we expect to strengthen the margin even further going forward. The newly regulated iGaming market in Brazil had a very strong start in quarter one. We saw the numbers coming down a little bit and stabilized in Q2. And we continue to see a rapid technology development in the travel sector, which we have many times previously highlighted, represent significant opportunities for us moving forward. Over the summer, we also had a very successful launch with the Philippine casino and hotel group Solar Resorts, where our software is helping to seamlessly connect their physical gaming environment with their digital offering. During the second quarter, we continue to streamline our organization in order to return to positive cash flow. While implemented cost savings, we are also actively working to grow our revenue base. In Q2, we began to see the initial impact of the cost-saving measures introduced earlier in this year. Those affected in Q2, but we see that we expect more effects of that in Q3 to reach the full impact by Q4. As mentioned at the beginning of the presentation, we had a really strong start in the newly regulated Brazilian iGaming market during the first quarter, but we see a little bit lower amount of volumes in the second quarter. We have observed a similar pattern in many other newly launched markets, such as, for example, Netherlands and Germany. But we believe that the current volumes and the current revenue has stabilized on this level going forward. About the travel vertical, a new software module launched earlier this year is called Face Check-in. We continue to see a strong interest of this particular software, particularly connected to the travel industry. So the solution enables user verification through facial recognition in a microsecond, for example, to log in or verify yourself to any type of services. We see, however, that the industry continues to be by long lead times and large-scale procurement processes. which makes from initial contact to potential contract signing timings much longer compared to other industries we are active in. We also see an increased intensity and interest from the industry in rolling out new solutions based on biometrics and facial recognition. We remain confident that our position with companies such as Ryanair and WestJet places us going forward in a very strong position to capture additional market share within the industry. At present, we are actively engaged in several ongoing procurement processes. Following the end of the quarter, we carried out a so-called omni-channel launch with the Philippine casino and hotel group Solar Resort. We're seeing growing interest from companies looking to integrate their physical and digital environments, and this launch serves an excellent example of that trend. At present, we had at least one additional major operator scheduled to go live during this fall. For those of you who have followed the company for some time, our financial ambition is a variant of this classic SaaS metric, the Rule of 40, which measures profitable growth. Our goal is to maximize growth per share in combination with the EBITDA margin, with a long-term ambition of maintaining a level of 80%. We can now unfortunately conclude that we will not achieve this target in 2025, even though that our ambition still remains. And with that, I will hand over to our CFO, Martin Boimel, to present the financial parts.
Thank you, Christian. As always, you have all the numbers and details in the actual quarterly report, but I will try to go through the highlights in this presentation. So net revenues decreased by 11% compared to the same quarter last year and landed at 18.1 million SEK. Here we lost a little bit due to exchange rate changes, and at unchanged exchange rates from last year, the decrease was instead -5% compared to last year. And compared to the first quarter of 2025, revenues went down by 4%. The gross margin was 70% in the quarter, in line with the level we have been at in the last 12-month period. I will come back to that a little bit later. EBITDA amounted to 3.1 million SEK with a margin of 17%. And cash flow from operating activities was just above 1.5 million kronor. And we ended the quarter with a cash position of 20 million SEK and an equity ratio of 87%. So if we go into the net revenue a little bit more in detail, Christian already mentioned this. We're down a little bit compared to the same quarter last year. Revenues in this quarter, quarter 2, 2025, was 18.1 million SEK for the quarter. And the decrease was mainly driven by the contract or the termination of the contract with RingCentral that we terminated in the summer last year. And that customer contributed over 3 million kronor in the quarter last year. So adjusting for that, we are actually up 6% compared to Q2 2024. If we go into the gross profit, you can see here in the chart to the left, gross profit in the quarter decreased slightly to 12.7 million SEK, driven mostly by the decrease in revenues, and the margin of 70% is in line where we have been in the last 12-month period. But as you can see in the chart to the right, that's lower than we have been previously in previous years. And here we believe that the margin will go up again as we turn to growth again. This is mainly driven by the economies of scale that we have in many of our larger direct costs that are driving the gross margin. And I think the biggest cost is our servers. They and that is generally relatively variable, but there are some fixed components and startup costs also related to the server costs. We also have some fixed license fees where we pay annual payment for certain capacity, where we also have some unused capacity at the moment. So as we turn back to growth, we believe that the margin will come up again. Going to the sales and marketing, we have continued to invest in this area, and the sales and marketing costs in the quarter amounted to 4.1 million kroner. And that corresponds to 22% of revenues. And as you see in the chart to the right, for the first 6 months this year, we spent 21% of revenues on sales and marketing activities. Going to EBITDA, we are up a little bit compared to last year, with an EBITDA of 3.1 million SEK and a margin of 17%. And but if you look to the right of the picture, you see that we had higher margins in previous years, and the drop in EBITDA margin is driven by the decrease in revenues and also decreasing gross margin. But we are also working on the operational costs, so that has partially been offset by the operational costs. And as I mentioned, related to the gross margin, I think it's the same goes here, that we are very well positioned with an optimized cost structure to expand margins when we manage to turn back to growth again. And finally, looking at the cash and equity ratio, we ended the quarter with a cash position of 20 million kroner. And if you adjust for our loans, the net cash was around 14 million kroner at the end of the quarter. And the equity ratio was 87%. And with that, I'll turn back to Christian for some closing remarks and the Q&A.
Thank you, Martin. And to summarize Q2 2025, our growth ended at -4% compared to the previous quarter. We recorded a year-on-year revenue decline, but we were 6% up when adjusted for the RingCentral. That will be the last quarter comparing these revenues from last year. We continue to streamline our organization with the goal of being net positive cash flow. In Brazil, we saw a decline in Q2 versus Q1, where the revenue fall a little bit, but are on a stable level right now, and we expect to remain at the similar levels going forward. Within the travel sector, we're observing a shift towards faster technology development aimed at enhancing the customer experience. We also now allow you with the omnichannel customer Solar Resort. And with that, I will leave over for the Q&A.
Thanks for that presentation. Now we'll go over to the first question here. When do you think growth will return?
Yes. Like this, we have set ourselves in a situation that we have signed many, I would say, enterprise deals with many big companies where the potential has not been reached yet. That's something we're working on daily to reach. So we will not give a date once that will happen, but the feeling is that we're having all the tools to see the growth come back again. But exactly when, that I can't say.
Thanks. What happened with the collaboration with the Swedish fintech company? Any new information?
Right now, I don't have any new information. I don't expect any revenue, at least this year.
Thanks. How is the cooperation with Stake going, and when will we see bigger revenues from that client?
Stake has had a positive impact in Q2 now. Probably one of the fastest customers from us in form of revenue. So at least that has been going in a positive way. Obviously, it's a huge potential. So yeah, we're working with them to increase this even more. But at least now we saw in Q2 it was going in the right direction.
Thanks. In what way do you see the travel industry adopt new technology faster? Is it through your existing customers?
Yeah, it's both. It's mainly driven by the discussions that come to us from both potential new customers and the existing one. And we're seeing especially a huge interest in facial recognition and the biometrics technology. And we believe it's just only we are at the first steps right now towards how to tailor the travel experience of the future. But we're feeling like everyone in this industry has this as their top agenda right now. So it's a mix of both new procurement processes we are in and the discussion we're having with our existing customers.
Thanks. EBITDA strengthened slightly compared to Q1. What should we expect for the rest of the year?
Yes, we're starting some more cost focus project now in Q2, and with that we're expecting the full effect coming in full effect in Q4. We still believe that we will be able to grow and increase our revenue. So a combination of both of them, we believe that we should see a higher EBITDA margin going forward.
Thanks. How is the collaboration with Croatia going?
Yeah, we announced that deal for a year ago, and it's been taking some time to get it up and running. But right now it feels like it's really going in the right direction. They started to offer check-in services to their existing customers, but also for new potential customers as also as a plugin. And we have not really seen the revenue coming in yet, but we really believe that this will pick up going forward, and the feedback from the Croatia team has been really good. So that we can reach their huge customer base in one integration and without any new contract and so on. We believe in the future that this will be a very successful partnership for us.
Thanks. Can you tell us something about the strategy to also increase revenue?
Yeah, we talked about that already in the presentation a bit, but it's a mix, obviously, of many things, both to reach the full potential with many of their major customers we have signed already, that has to enter to get them to use us for more use cases or more countries and so on. We believe the potential is really big with the existing ones. At the same time, to looking to expand to new ones as well, signing more new customers, but also working with resellers and so on, that can help us as well in different regions and different industries and so on. So it's a mix of ways we believe that the increase in revenue can happen.
Thanks. You have talked for quite some time about cost focus, but how will it lead to growth in check-in again if you don't dare to invest?
Yeah, so we have invested, I would say, heavily in R&D over the years. We believe that we are at a really good stage, like product-wise, software-wise. So we believe a combination that we can find ways to use maybe some of these costs, also put in more in like say revenue target projects. So it's a mix of that we moving some cost over to other departments and so on. But at the same time, we believe that even with those cost savings we've been doing, we believe that we still can deliver a good product, and that we're having enough of resources to also continue to find growth driving initiatives.
Thanks. Interesting with the omni-channel customer. Please tell us how your software adds value in Omni.
Yes, it's mainly based on how you connect a physical business with a digital one. For example, our new launch product, Face Check-in, fits in here really well with a focus on like facial recognition. The usage area is huge in several industries. For example, in travel, where you can combine your digital experience with so-called like go to like travel kiosks and so on. Or it's like, for example, with this recent Solaire one, like how you work with the casino and hotel operations, where you can combine what you do digitally or physically. So it's more to get a more seamless experience before the physical and the digital part.
Thanks. You don't think you will reach the financial goal for 2025. Is that still your long-term goal?
Yeah, like the financial goals and so on is up to the board, but we have announced today that we believe we will not reach the financial ambition for 25, but then the goal still remains, and we will see going forward if something will change or not.
Thanks. You mentioned that traffic dips are common in the newly regulated iGaming market. How long do they usually last?
No, but once new markets getting regulated, we normally see a huge traffic spikes the first month, then it comes down a bit. We had a very strong start in Q1. We saw that it went down a little bit now in Q2, but it stabilized itself at this level where we are right now. We don't see that it will go down more, but we have seen the same examples, for example, in Germany and Netherlands before. So yeah, it's normally really busy in the beginning, and then it slows down, and also related to the operators maybe spending a little bit less of marketing money after some period as well.
Thanks. Now we'll move on to the last question here. The gross margin is 70% in the quarter, which is significantly lower than a few years ago. What is this due to, and what can we expect in the future?
I'll jump in. Yeah, I'll jump in there since it's on my desk. Yeah, the gross margin, I think I covered a little bit on the slide. The gross margin has been falling in the last 2 years, and it's mainly driven by the fall in revenue, and in combination with the fact that many of the costs that we have, many of the direct costs that we have that impact the gross margin, there are some economies of scale in those costs. So, for example, server capacity is relatively variable, but there are some fixed components in that. I mentioned also there are some fixed license fees that we pay a fixed amount every year, where we can grow a lot within those fees or licenses. There are some fixed costs also in the direct cost, and when revenues go down, the margin also goes down. So, having said that, I think we're in a good position to increase the margins when we turn back to growth again.
Thanks. And thanks for the presentation and Q&A. And I'll give the closing remarks over to you, Christian.
Thanks for everyone listening. Also sending questions. It's really appreciated that we have interest of our company. And with that, I hope everyone has a wonderful day.